Great freaking answer so far. Holy shit. I mean, that's a pretty damn good answer. Do I need to look for a new job? So first of all, I think this is an amazing freaking answer. Welcome to CPA versus ChatGPT round 2. You might have known or heard or watched the video where I did a round 1. You might want to check that video out. There, ChatGPT answered some softball questions, okay? And it did, overall a good job answering these basic, small business owner tax questions. But now it's time to go to fast pitch, okay? And so I'm going to ask it some more challenging questions that you can't just Google the answer to and get a correct answer. At least not the most strategic, tax strategist type of answer. So the questions I'm going to ask, I thought about them real quick before our video is, can I hire my minor children and pay them for services they perform in my business? And if so, do I need to pay payroll taxes if I do hire them? Second question, how does an S corporation save business owners on taxes compared to a sole proprietorship? Very common question, kind of a complex answer. Let's see how it does. If I earn $100,000 in profit in a business taxed as an S corporation, how much do I need to pay myself as the owner of the business? What, my reasonable compensation might need to be. Fourth question, as a business owner, how much after-tax dollars, so this is like Roth money, right? After-tax dollars, can I put in a retirement account in a single year? I have a feeling we're gonna get the wrong answer from ChatGPT on this. And then the last question is sort of, important in the moment right now, it's kind of tax time, is do I need to issue a 1099 NEC to an independent contractor if they perform their services outside of the United States and they're not a resident or citizen of the United States? So those are the questions I'm going to type in, and let's jump right into it and see how it goes. So I'm going to copy the question that I had kind of ready. Can you hire your minor children and pay them for services they perform in your business? If so, do I need to pay payroll taxes if I do hire them? You can see the softball questions that I asked it before and the answers there. That's sort of a preview to that video if you didn't watch it. But let's see what ChatGPT comes up with here, and then I'll give you sort of what I think the appropriate answer is, the tax sort of strategist answer versus the ChatGPT answer. So yes, as a small business owner in the United States, you can hire your minor children to work in your business and pay them for the services they perform. However, you need to ensure that the work that they perform is legitimate and necessary for your business, and that you pay them a fair wage for the services they provide. So far, ChatGPT doing pretty good. Give me a little jab there. If you do decide to hire your minor children, you may be required to pay payroll taxes depending on the amount of wages you pay them and the type of business entity you have. If you are a sole proprietorship or single member LLC, you are not required to pay payroll taxes on the wages you pay to your children who are under 18 years old. However, if you have a partnership, corporation, or an LLC with multiple members, you are required to pay payroll taxes on the wages you pay to your children, just like any other employee. Okay, third paragraph. This is a long answer. It's important to keep in mind that if you hire your minor children, you need to treat them like any other employee and comply with all applicable employment laws and regulations. This includes keeping accurate records of the hours they work, providing a safe work environment, following minimum wage and overtime rules. It's also recommended that you consult with a tax professional or an accountant to ensure that you're complying with all tax and employment regulations. All right. I'm going to be honest. I thought it was a way better answer that we were going to get out of this. I would agree with, 80% of what's being said here. Where I might disagree or provide some clarification on is, if you decide to hire, you may be required to pay payroll taxes depending on the amount of blah, blah, blah. If you are a sole proprietor or single member LLC, you are not required to pay payroll taxes. So that is correct. If you are taxed as a sole proprietorship, which would be a sole proprietorship or a single member LLC that is not elected to be taxed as an S corporation or a C corporation or what have you, you are not required to pay payroll taxes. However, if you have a partnership, corporation, or an LLC with multiple members, by the way, an LLC with multiple members in general is taxed as a partnership. What I think the question really should be is like, I want the answer to is, hey, I have an S corporation. Do I need to put my kids on actual payroll and pay Social Security and Medicare taxes? And the answer to that is yes, if I pay them directly out of my S corporation. However, there are strategies that you can put in place to where you don't have to pay Social Security and Medicare taxes and unemployment taxes and all that stuff if you hire your minor child in your S corporation. So again, you can pay them directly out of your S corporation. That's one way to do it. If you do so, you're going to eat up at some of your tax savings because you're going to have to pay 15.3% in Social Security and Medicare taxes. Again, you'll have the unemployment taxes as well. But there are strategies that you can put in place to hire your children and sort of set up, you can call it a family management company, okay? So the family management company is providing services to your S corporation. The family management company itself is a sole proprietorship. And then the family management company is the one actually paying your minor children to perform these services. So that's sort of the strategy behind getting out of paying the Social Security and Medicare taxes for them. So good answer, but I still win because it's not giving you the strategy on how you can do this with an S corporation and avoid paying those taxes. So if you go by just the answer here, you might actually put your minor children on payroll and pay those additional taxes for no reason. All right, the second question was, how does an S corporation save business owners taxes compared to a sole proprietorship? All right, so ChatGPT gave me a jab with the first answer. I can't even spell proprietorship here. He hit me with a jab, all right, and then I gave it, I guess, a left hook, right? And so, you know, I'm claiming the victory on question number one. And make sure you consult your tax professional on how to do that and avoid the, you know, paying the payroll taxes for that. Question two, I don't know, it's stumbling a bit here. It says, how does an S corporation save business owners taxes compared to a sole proprietorship? An S corporation is a type of business entity that can provide tax benefits for business owners compared to a sole proprietorship in several ways. Self-employment tax savings. In a sole proprietorship, the business owner is responsible for paying self-employment taxes on all of the business's net income. However, in an S corporation, the business owner can pay themselves a reasonable salary and only pay self-employment taxes on that salary. Any remaining profits can be distributed to the owner as a dividend, which is not subject to self-employment tax. This can result in significant tax savings for business owners. Holy shit. I mean, that's a pretty damn good answer. So good job. But it's writing some more things here. So let's see what's going on here. Deduction of certain expenses. As corporations can deduct certain expenses such as health insurance premiums and retirement plan contributions, which can reduce the amount of taxable income and lower the tax bill for business owners. Pass-through taxation. S corporations are considered pass-through entities, which means that the business income and losses are passed through to the individual tax return of the shareholders. This can result in a lower tax rate compared to a sole proprietorship, since the business's income is only taxed once at the individual level instead of being subject to both business and personal taxes. We're going to come back to that. That seems like a wrong answer. I'll read that again, but I think that's an absolutely wrong answer. Limited liability protection. S corporations also offer limited liability protection, which can help protect the business owner's personal assets from business debts and liabilities. This protection can help reduce the risk for business owner and make the business owner more attractive to potential investors. I don't think that's a tax benefit, so I don't know why that's an answer. Okay, last question. It's important to note that S corporations have certain requirements and restrictions that must be met, including having no more than 100 shareholders and meeting certain ownership requirements. Additionally, the process of setting up and maintaining an S corporation can be more complex and expensive compared to a sole proprietorship. Therefore, it's recommended that business owners consult with a tax professional or an accountant to determine if an S corporation is the best choice for their business. That is also correct. And I would actually make this statement. I've got a video out there on YouTube saying, 4 reasons that you should not be taxed as an S corporation. You should probably watch that video because the answers provided here are correct-ish, but there are certain reasons where you don't want to be taxed as an S corporation. In fact, some of those reasons, I'll just rattle them off real quick because I think it's relevant to the answer here, is if you live in a city or a state where they have sort of a negative sort of tax opinion, if you will, of S corporations, and they might impose some other excise taxes on S corporations to where it doesn't make sense to do them. That's one of the reasons. Another reason might be if your business is actually rental real estate, you don't want to be an S corporation in that case. Another reason, just off the top of my head here, would be if you have a high-paying W-2 job and also running a business as an S corporation, you're probably going to actually pay more taxes as an S corporation than you would if you were taxed as a sole proprietorship. So I think my reaction to the first sort of answer here was pretty good. I think it's a great generic answer. And I was quite shocked. I didn't think ChatGPT was that smart. Number 2 here, deduction of certain expenses can deduct. So just so you know, like health insurance premiums, if you're a sole proprietorship and you're paying health insurance, and it's not offered by your spouse's employer or something like that, you can deduct those too. It's called an adjustment to gross income, and you get a deduction there. So that's not really true. It's not that you can't do that in an S corporation. In fact, not only can you do it in an S corporation, but if you do it properly with an S corporation, not only will it save you money in income tax, but there's a strategy. It's also a video I have on my YouTube channel where the proper way to do it will save you an additional 15.3% based on the number of or the amount of your annual insurance tax, health insurance premium. So if you're paying 10 grand for the year, you could save another $1,530. A lot of CPAs, a lot of tax strategists, they don't even know about it, or they don't actually think about how you can incorporate that tax strategy. So maybe watch that video. Retirement plan contributions. I mean, sole proprietors can put in money into retirement plans as well. They can open up a SEP IRA. They can contribute to a regular IRA, an individual retirement account. They can contribute to a solo 401k even. So I'm not sure that's correct. It's not like, hey, if you're a sole proprietor, you can't do this, and you can only do this in an S corporation. So, answer number 2 here, I think it's kind of dead wrong. If it's okay to say that, let me know your opinion based on my response, but that's not actually true. Number 3, pass-through taxation. S corporations are considered pass-through entities. That's correct, which means that the business's income and losses are passed through to the individual tax returns of the shareholders. Also correct. This can result in a lower tax rate compared to a sole proprietorship, since the business's income is only taxed once at the individual level instead of being subject to both business and personal taxes. This is a wrong answer. So what ChatGPT is trying to say, or should say, is that if your business is taxed as a C corporation, then the profits from the business are taxed at a rate of 21% at the C corporation level. So the C corporation itself has to pay the 21% on the profits of the business. And then when the shareholder, the owner of the C corporation, takes that money out of the business via a dividend, it has to pay income taxes on that money. For S corporations, it's truly a pass-through entity. So the S corporation itself doesn't pay any income tax. It flows through to the individual, and it's on the individual tax return where you have to pay your income tax. So to say that an S corporation can result in a lower tax rate compared to a sole proprietorship is wrong. That's not correct. It's really the same tax rate. And I've got videos on this too. Maybe I'll post them up so you can see what those videos are. I've got a video explaining how S Corp taxes work. So I'll expand on what I just kind of said there, as well as comparing S Corp taxes to sole proprietorship taxes. And you will see that the income tax is pretty much the same between an S corporation and a sole proprietorship. It's really the Social Security and Medicare taxes is where S corporations can have the advantage. Okay, so I'm taking the victory on this question as well. And I'm not gonna quite give, if this was an exam, this is an F, this is a fail, this is the incorrect answer. So, you can't have your cake and eat it too. It gave a decent answer on number 1 here, but the other stuff, it failed. And the limited liability protection has nothing to do with tax benefits, so I don't even know why it kind of responded that way. To me, it sounds like it went out there, got some answers from Google, compiled it in a way that sounds great and in conversational form, but it spit out the wrong answer. All right. The third question I was going to ask it is, if I earn $100,000 in profit in a business tax as an S corporation, how much do I need to pay myself as the owner of the business? So ChatGPT alluded to the answer a moment ago. It was saying, hey, you got to pay yourself reasonable compensation. But, I want to know more specifics, like how much should I pay myself? What is reasonable compensation? So let's see what the answer is. It says, as the owner of an S corporation, you must pay yourself a reasonable salary for the services you provide to the business. The IRS does not provide a specific definition of what constitutes a reasonable salary, but it should be based on the services you provide and the industry standards for similar positions. Agreed. In your scenario, if your S corporation earns a profit of $100,000, you should pay yourself a reasonable salary that is commensurate with your services to the business. Let's assume that based on the industry and the services you provide, a reasonable salary for you is $60,000. In that case, you would pay self-employment taxes on the $60,000 of salary, but not on the remaining $40,000 in profits. Great freaking answer so far. So the self-employment tax rate for 2021 is 15.3%, which includes 12.4% for Social Security and 2.9% for Medicare. That's correct. However, the Social Security tax only applies to the first $142,800 of wages and self-employment taxes in 2021. Also correct, that number has increased for 2022. The Medicare tax applies to all wages and self-employment income. So it's saying there's no cap basically on the Medicare tax. Using these tax rates and assumptions, you would pay self-employment tax on the $60,000 salary as follows: Social Security tax $60,000 by 12.4%. Which is $7,440. Medicare tax on 60,000 times 2.9, so $1,740. Total self-employment tax, $9,180. So it's not really comparing that to what it would be if it was a sole proprietorship. So, I wish it would be awesome. So first of all, I think this is an amazing freaking answer. But if I would expand on that by comparing it to what a sole proprietorship would pay. So like $100,000 in profit times sort of the 15.3% would be around $15,000. So if you take the 15,000 and you minus the roughly 9,000 here, you're getting a savings of around $6,000. So it would be awesome if it just kind of wrapped up and kind of said that. Overall, I think this is a great answer. I would say that 60,000, I'm probably being too critical here. It depends, right? 60,000 might be fine. So it's saying, based on that, if you determine your reasonable salary was 60 grand, I would say that, you might be able to determine a lesser salary, or there might be a strategy involved to pay you a lesser salary. But I can't be that, so critical. I was shocked. Let me finish reading the rest of the paragraph here. You would not owe self-employment on the remaining 40 grand in profits since it's considered salary or wages. Since it's not considered salary or wages. Okay, cool. However, the profits would be subject to income tax at your individual tax rates. It's important to note that a simplified example and that actual tax calculation may be varied based on individual circumstances. So it's recommended that you consult with someone, blah, 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 blah. All right, cool. So here I would say if we were in the ring, I mean, I'm not a boxing expert, but it threw me a solid right hook. And, my answer would be very similar to this. Where would we deviate? I would say that there's strategies to this. Determining your reasonable compensation. You can get aggressive with it depending on your risk tolerance. But overall, a great answer. What I would have probably said though, to wrap up this answer to make it a little bit better, since it went through the math, was to compare it to what a sole proprietorship would have to pay in taxes. So you can kind of calculate, okay, what the difference was. But remember, I got to be fair. The question was, if I earn this, how much do I need to pay myself? And the question related to reasonable salary, it provided a very good answer. Okay, the next question I had for it was, as a business owner, how much after-tax dollars can I put in a retirement account in a single year? So this was the fourth question. Let me know in the comments, were you surprised at the complexity at the answer that was provided? I was quite surprised by the response with number 3. All right, as a business owner, how much after-tax dollars can I put in a retirement account in a single year? The answer so far is, as a business owner, the amount of after-tax dollars you can contribute to a retirement account in a single year depends on several factors, including the type of retirement plan you have and your business's income. Agreed. Here are some general guidelines for the maximum annual contributions to the most common types of retirement plans for the self-employed individuals. SEP IRA for 2022, the maximum contribution you can contribute to make to a SEP IRA is 20% of your net self-employment income up to a maximum of $61,000. However, the maximum amount of net self-employment income that can be used to calculate the contribution is $290,000 for 2022. So far, I'm okay with this answer. Solo 401k. So this is a good point. You can contribute $20,500 in salary deferral contributions plus up to 25% of your net self-employment income up to a total of $61,000. If you're 50 or older, you can also make catch-up contributions of up to $6,500, bringing your contribution limit to $67,500. This answer is partially right, but partially wrong. And you can't have your cake and eat it too. So, I guess the answer is wrong. Remember, my question was how much after-tax dollars can I put in here? And so, what it's kind of saying is like the $20,500 in salary deferrals, yes, that could be Roth or after-tax money. But the 25% of your net self-employment income up to $61,000, you can't do that, especially in 2022. There is talks. They're talking about this legislation, and it may happen for 2023. I got to read up on that, to be quite honest, but it's saying here for 2022. So for 2022, if you put in this other 25% of your income, so you might refer to that as the match, that's not after-tax dollars. So that's a wrong answer there. If you're 50 and older, you can do the catch-up contribution of $6,500. So that's the $20,500 plus the $6,500 could be in a Roth account. So it gets a ding there from me. Simple IRA for 2022, you can contribute up to $14,000 in salary deferral contributions, plus up to 3% of your net self-employment tax, up to a maximum of $14,000. I'm going to be just straight up honest with you. I don't really recommend simple IRAs that much, so I don't know the numbers off the top of my head. I'd have to actually look them up myself. So it's important to note that these contribution limits are subject to change each year, that's correct, and may be affected by other factors, such as your business entity you have and the number of employees you have. Additionally, contributions to retirement plans are typically tax deductible, which can help you reduce your taxable income and lower your tax bill. But I specifically asked about after-tax dollars. So if you're making an after-tax Roth contribution or an employer match or whatever, those aren't going to lower your tax bill because they're with after-tax dollars. You pay the tax and then you put the money into the account. Of course, it's going to give the generic response here at the bottom saying, hey, best if you consult with a financial advisor or a tax professional. Here's what I want you to know, okay? I'm going to give you an example of an S corporation, but it's correct. Like, let's say I paid myself 60 grand or so in wages as it was suggesting, or not really suggesting, but saying, as if I determined that amount in the question prior, I could defer through my salary deferral $20,500. But you might not know this. With that solo 401k, I can actually, you want to work with a company that knows what they're doing here, but you can actually do what's called a voluntary after-tax contribution and then convert that voluntary after-tax contribution into a Roth account. So don't quote me on the exact number here, but if I paid myself 60 grand in wages, there might be an opportunity to put in about $50,000 in the retirement account, even more, probably up to $60,000 into the retirement account in a single year. I would have to do the math to give you the exact amount, but you can put in after-tax dollars, which eventually would be Roth dollars, of 60 grand or more in a year if you know the strategy. Okay, so this is an incorrect answer. And again, in fact, a lot of accountants, a lot of CPAs, a lot of people who call themselves tax strategists don't know about that you can put in more after-tax dollars, not just the $20,500. All right, the last question was sort of a question that I was asking because it's relevant right now, depending on when you're watching this video, you know, you should have issued 1099s by now. It's about, you know, mid-February as to when I'm recording this video right now. So let's see what the answer is. Do I need to issue a 1099 to an independent contractor if they perform their services outside of the US and they're not a US resident or citizen? So let's see what the response. The requirement to issue a 1099 NEC to an independent contractor depends on the location of the service provider, not their citizenship or residency status. Good, you know, nuance there that it's saying. According to the IRS, you paid an independent contractor $600 or more for their services they provided to your business during the year, and their services were performed in the course of your trade or business, you may need to issue a 1099. Good point that I said may, because you may not. However, the requirement to issue a 1099 NEC only applies to independent contractors who are based in the United States or its territories and are U.S. citizens, resident aliens, or entities formed under the U.S. law. If the independent contractor is based outside of the United States and is not a U.S. citizen or resident, you generally do not need to issue a 1099 NEC for the services they provide. Let's see what this last paragraph is. It's important to note that if the independent contractor is based in a foreign country and you paid them more than $600 in a year, you may still need to report the payment to the IRS on a different form, such as Form 1042-S, which is used to report payments to foreign individuals and entities. It is recommended that you consult with a tax professional or an accountant to determine the reporting requirements, blah, 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 blah. Okay, I'm going to just flat out tell you, I mentioned in round one video that I'm not all knowing and I don't really know the specifics here, but I will say, as it relates to issuing the 1099 NEC, my answer would be if they're performing their services outside of the US and they're not a citizen or resident, generally, like it says here, you do not need to issue the 1099 NEC. What you probably should do, though, is ask that person to complete a W-8-BEN, B-E-N. Make them fill that form out so that you have your record of it saying, hey, this person told me and they signed to it, they attested to that, you know, they're not subject to these taxes and therefore I don't have to issue them a 1099 NEC. So that's your proof that you can hold on to in the event in the future the IRS says, hey, that person lied to you, you should have been paying that. Well, fine, that's fine if they lied to me, but I've got my proof here that says that they said that they weren't subject to these taxes. What I was going to say about not being all-knowing is I don't even know what Form 1042-S is. I would have to look it up to find out if that's correct or not. I'm not really sure. I'd have to look into that. So that about, you know, wraps this up. Round two, it was more of a slugfest, okay? ChatGPT 1 hit me with some right hooks that I really wasn't expecting. I thought it was just going to give me generic jab sort of responses and answers like it did in round one, but it did a pretty good job. But clearly, I think if I think back to my response to the answers, I think I won maybe 3 out of the 5, at least 2 out of the 5. I was the clear winner because the response wasn't correct. It was flat out wrong. So let me know what you thought about this video, the comments, where you think ChatGPT is going, where the industry is going. Do I need to look for a new job, or what year will I need to look for that new job? Let me know in the comments below. And thanks so much for watching. I'll see you either in the next video or perhaps in the course that I have, which teaches small business owners how to save $1,000 in taxes and incorporating these strategies correctly, not based on the way ChatGPT kind of answered the questions. Thanks for watching again, and I'll see you in the next video.